This week, here on our free segment on YouTube, join us as we take a look at the decrease in confidence for data intelligence coming out of the CPI. But it wouldn't be fair to not talk about how private intelligence can help you have more confidence in that data. Stick with us as we take a deep dive into our trends report and offer you a giveaway. For now, sit back, relax, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lyndsay.
How are you?
I'm great. How about you?
I'm good, thank you. Did you have a nice weekend?
Half a nice weekend. We finally got a day without rain. I was reading some of the statistics up here in New England that it's been, I forget, like 15 weekends. It's rained like consistently.
Yes.
We just can't get a break.
I had heard something like it was like the 12th Saturday in a row.
It was
and then
exactly.
like the 14th weekend in a row where there had been
Look at me getting my numbers wrong.
I know.
Thank you for having the numbers today.
I mean, that's what I had heard. So I
think
really,
you're right. That sounds better. But it's, due to rain this weekend, I heard as well, at least a little bit.
I know. It's like
keeping the streak.
Instead, let's shift over to the economy
Yes.
and data, our two favorite things to talk about.
They really are.
And this headline goes over exactly that. Mm-hmm. So the first headline that we're talking about today is Economist raised questions about quality of U.S. inflation data. The article is claiming that the staffing shortages over at the Bureau of Labor Statistics and a heavier reliance on essentially data estimation is calling into question the validity of specifically the Consumer Price Index or the CPI. And really just kind of wondering what role that is playing in all of the decisions that are made surrounding that CPI figure. We've talked about it time and time again.
The
CPI is more prevalent in everyday conversation than I think it ever was.
It's crazy
COVID.
how much we talk about it, right? And we've had this discussion, and we will do again today, I'm sorry, but comparing the CPI to something like the PCE data, there are different data collection kind of data sets out there.
Yeah, exactly.
And I think it's been probably a long time before there's been so much scrutiny on this data that's being collected, as you said, by these government sources.
Right, exactly. So I think the article kind of goes hand in hand with today's current events, with the federal government layoffs that were happening.
Yes.
And that is probably a reason why the spotlight is directed here.
It is.
But let's start with the basics. So the article says that the Bureau of Labor Statistics has been experiencing staffing shortages and that, in fact, it has closed 12 data collection offices since 2012. So
that goes back a little bit further.
Yeah, a lot further. So what does this mean for how inflation data is gathered if we're needing the data to be able to make these decisions?
Exactly.
And then we're out there closing locations.
We want that data.
Yeah.
Sure. So just a quick level setting. So the CPI data, that's collected by the Bureau of Labor Statistics, as you mentioned, which is part of the Department of Labor.
Okay.
And specifically, these staffing shortages, they called out the January 20th hiring freeze. They said they are understaffed and as a result need to reduce the number of, outlets and quotes is what they're looking at, the businesses from which they're gathering this inflation data and then the quote, the literal price of a good or service. They said they reduced the number that they attempted to collect really within the past couple of months. So specifically, the CPI historically has collected data from 75 urban areas. That's one of the big differences. The PCE is a little bit more broad-based. The CPI is looking at consumers in urban areas. What are they spending out of pocket? And in April, they stopped collecting in Lincoln, Nebraska and Provo, Utah. And in June, stopped collecting in Buffalo, New York. So there is a reduction in terms of just the areas, right? The centers.
Yeah. So, I mean, those are some, I think Buffalo, New York, that's a pretty big city.
It is.
So what does that mean in terms of, is it leaving holes or gaps in the data? And I know from an ITR perspective, when we're talking to clients about taking in their monthly historical data in order to provide them with a forward look or a forecast. We need that data set to be relatively stable without large cancellations or shutdowns of plants or branches or things like that create volatility in data.
That is true. And so I'm going to read the quote from the BLS just to put their voice out there, I guess.
Yeah.
They said they expect, quote, a minimal impact on the overall all items CPIU index, but there may be they may increase the volatility of subnational or item-specific indexes. So really, I don't expect, say, Provo, Utah, or Buffalo, New York. It's not like their economy is moving so much differently than anywhere else that we would get those kind of outsized effects by excluding them from data collection. So as long as you're generally moving along with the national level, the more data you can collect, the better quality it will be. But at the end of the day, we might see certain regional inflation indices get a little bit more volatile just because when you limit the number of collections, right, that's going to show a little bit more skew to the upside, to the downside. Hopefully that averages out over time, but we just don't know for sure. So we're trying to get our best estimate. The BLS doesn't put out a huge, they have a lot on their statistical methods, but we're not getting like exact numbers here to unpack in most cases. So doing the best they can, clearly, with reduced resources, and we're doing the best we can. And economists always do this to say, what data do I really trust? Right. There are different kind of levels of confidence that I have in different data sources. Is it a survey or is it, a little bit more concrete? Like, where are we getting the data from?
Right.
We do kind of handicap some of the data that we see coming in, especially when two different data sets might butt heads over the trend.
Yes. Yeah. So kind of a shift from public data to private intelligence is what I will call this
I like
segue. So I think our regular listeners and our regular followers know a lot about the Trends Report. We refer to it often in this show.
Yes, we love the Trends Report.
Yeah, we really do. It's just such a great tool for business leaders. So lots to kind of unpack there, but I thought tying the CPI article or the question marks around the CPI from that article to some more private intelligence data that we have would be a good idea.
Well, let's look at the CPI within the Trends Report.
Right, share it with us.
This is one of the pages that, like you said, we report out monthly. Where is the new data? And of course, we put it into our ITR-ism. So we're not just giving the headline, but we're putting it into our rate of change. We have the data trend. So both charts, however you want to view the world. Typically, the CPI is reported on that kind of year-over-year change. So you can see, I hope you can see, it's a little faint, but that light gray line, the 112 rate of change, we also take that to the 1212. So smooth this out, the annual trend.
Right.
This has our forecast for what we expect inflation to do going forward. We have been talking about this, Lyndsay, for a long time, that we expect inflation to be picking up late this year and in 2026. You can see it
I was visually. Say, I can't believe this is the first time we've brought this chart up in this show. Because
we're overdue.
It really is. We talk about it all the time. We've been calling on a resurgence of inflation since before the election, since before tariff turmoil, Liberation Day, whatever it was called. This forecast was in place.
Yes.
So it's awesome that we're bringing it to show and tell today.
I love it.
I know.
And I love the way this is presented too. Now, there's so much more detail in the Trends Report, right? We have a full write-up every month just on one other factor, right? What leading indicator or what subcomponent is really part of the discussion? What's maybe a risk? Why could we be wrong? I love that we report on that as well, as well as
transparency. It's a core value of ours.
It's so great to see, because then if things do need, eventually all forecasts die, right? We need a new revision at some point in the future, hopefully not soon. And there's a lot of evidence behind this one, but I want to know that we were watching this for a long time as we saw those risks mount. This tells you what should you be watching that could sway our thinking. And we can look at GDP. That's, again, probably one of the most used pages of the Trends Report, but it shows, again, the same thing, that growth rate, that rate of change world that we we all live in, the real world. What is the level of output, right? That's the bar chart here on the right. And you can very clearly see the impact of that kind of first quarter. It technically was a contraction. We don't have enough pixels, I guess, to show it. I don't know. Maybe if you squint, you see it go down a little bit. Right. But the general trajectory that we expect, it's no recession. It's what we've been saying on this show.
Right.
It's just being said a different way here on this page. No recession, slower growth, yes, but growth, all full steam ahead.
Yeah. And I think one of the questions that comes up when we're working with clients, whether it's someone that consumes a trends report or one of our consultative programs, we hear it on the phone all the time. You get a little pushback every now and again.
Yeah.
It's like, why do you not think that that data revision leads to a revision in your forecast? Why is everybody else saying that a recession is all but imminent and you are not?
That's my favorite question. Why are you out of consensus? Yep.
Yeah. But again, it lends itself to something that I had kind of just touched on a little bit earlier about transparency being one of our core values, but also this reliability in our accuracy, and not just our accuracy, but the duration at which we put a forecast in place without changing it is something that we track very closely as well.
And I'm actually really excited on that front. We're currently putting together kind of like a mid-year check-in on our accuracy. I don't think I've told you this yet.
No, I didn't know that.
Yeah, but next month, Brian and I are presenting the kind of monthly update webinar. We're doing big summer blowout with that mid-year check-in. Just what has changed, what hasn't changed, and really, again, for thus far into what has been a tumultuous year, to say the least. How close is that accuracy? I'm really excited to report on that.
Yeah, I think that will be really cool to look at and probably refer back to here in studio as well, because we do get that question a lot. We do, there's always going to be critics and skeptics out there.
For sure.
That's
normal. We
us.
welcome it.
We do. And I think something like the Trends Report is such a fun example. We used to do these tutorials with the free trial Trends Report subscribers.
Yeah.
And one of the slides that we would bring up was about the executive summary, which I know you said GDP is one of the most popular pages, but I will tell you that I personally have both my favorites and my push notifications turned on my app and on my email for the executive summary.
That's probably the most popular.
I really think that it is.
Good.
Because in 2006, we were in writing in the Trends Report, in the executive summary, calling for the 2008-2009 recession, the Great Recession. So this is where so many of our clients who were paying attention and reading that on a monthly basis had this red flag, this heads up that they so desperately needed. And I truly love the testimonials that come out of that time period because they're impactful, they're insightful, they made a difference. It's really, really cool.
Oh, it's the best. And it's, almost 20 years ago now that we were first on record calling for this event. And we still get them. People remember. Where were you when you heard this? And what did it do if you acted on that advice? Those are some of my favorite. I clearly was not here.
But neither
I
of
won't
us
take
were.
credit, but it's amazing to see.
Yeah, it is really fun. And I'll say this, the Trends Report, those forecasts, they're not reactionary. I think that's really important in a time of uncertainty. They are sector specific, so it doesn't matter if you're in construction or manufacturing or a healthcare worker. Like, there is an article, there's an indicator, there's information in there that's going to change how you are thinking about your business in that given time period and through those cycles that are being forecasted 3 years out in that report. And perhaps my most favorite takeaway is that they're actionable. There is a management objective tied to these. There is actionable business guidance.
Yes, I didn't show any of those. I haven't shown the whole page here for any of these, but every single market, whether it's, this aspect of commodity prices, that aspect of one specific manufacturing segment, what do you do if you're here right now? Not just what do you expect overall, but what do you do in this moment every single month? It's great.
Yeah. So if you're not in a position where you're currently working with a trusted advisor from ITR and you still want to have a level of interaction and some guidance from ITR's insights, or if you just want another data collection point to take home to your business decisions, the Trends Report is a no-brainer for so many.
It really is.
And I want to bring back the free trials. I want to scream them from the rooftops and remind everybody that they're available and that we are happy to walk you through it, talk to you about what to look for, heed you against falling victim to any false signals on a single indicator.
Exactly.
We're going to continue to report on CPI even after reading this article today.
We will.
And we won't be changing our GDP forecast based on that current data revision. And any changes that do happen, we also scream those from the rooftops.
That's where you see them usually first.
Yeah, and get and give you the why behind that.
Exactly. That's just as important.
Yeah, so you can get your information from these public sources, then you can get that private sector intelligence that we were talking about.
That's the edge, I think.
I think that's the edge for sure. So thank you so much for your time today. As always, I appreciate your insights and your expertise. And that's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like this full-length episode and a special link to a free trial of the ITR Trends Report, click on the link in the description below. But until next time, bye, Lauren.
Bye, Lyndsay.